Hello and welcome to the Shadow Traders training program. My name is Melanies, and in this video I'm going to be talking about what is a clear trade. How do you spot a clear trade? I'm going to be starting with the 6E 1 minute chart to show you when is the best time to do your clear trades. As you can see in this video, what we have is the early morning time frame. And what we have is a bearish fan going down. We have the 200 moving average, we have the 100, we have the 50 moving average, which is your magenta, the 20, and the 13. The price is clear of all the moving averages. It is below. So therefore, we have a shorting opportunity. Now, your clear trade entry, the perfect clear trade, the one that I call where all the stars align, is right here starting at this cross. Whenever the 13 moving average crosses the 20 moving average, your black moving average, and gives you a nice angle, you have to have the touching candle right at the cross or close to the cross as possible, and then the price breaks away lower and lower and lower. When you see that, and you see that the 13 moving average is separating from the 20 moving average at a strong angle and the divergence is increasing, you can see that you have a clear trade opportunity. Similarly, you can see the 20 moving average separating from the 50 moving average, the 50 moving average separating from the 100 to give us what I call a Chinese fan. Now, the wider the separation and the wider the separation between the candles and the 13, the longer your trend is going to last for. The smaller the separation, the shorter your trend is going to last for. As you can see here, earlier we had at 525, we had a cross, we had the candle touching, but you can see that the separation was very narrow and that the angle was not strong on the 20 moving average. It was almost flat, and you can see that even though we had a clear trade, it was very much short-lived and did not continue for a long period of time. It retraced back and crossed back up. In this case, you can see that the angle is much stronger. The separation increases at a rapid pace, and you can see that the trend is much longer. We have more price action starting up here at around 1.3590, and the low of this trend is around 1.3569. So you can see that there's a lot of ticks up for grabs. Now, when I talk about the cookie cutter strategy, I talk about looking for this opportunity in the market. Every time you see this fan and you see the price, the cross, the candle touching, and you see additionally, as additional confirmation, you will see your shadow indicator giving you a big move, and you see your Lin ray crossing right just before that and going, both of them are parallel to each other and going in sync with the trend. So with that, you can see that we have a good entry, and if you were doing the cookie cutter formula where you're going for 4 ticks, if you entered here on the first candle, you would be able to clearly make your 4 ticks in this move. Now, there are always 2 entries on a fan. Sometimes there's 3 or 4. But I always tell people, for the cookie cutter formula, for conservative trading, if you want to get good results and consistency, then go for 2 entries on each fan, depending on how much separation you have. If the separation is flat like this, then rather wait for a stronger fan to give you more separation before you make an entry on the clear trade. As you can see here, we had the angle sharper, so my entry would have been here to grab my ticks and get out. If once I saw this retracement, it hit the pivot, and then it bounced and retrace back to the 13. As soon as you see the green candles retracing back to give you what is called your gap close, and as soon as it touches or gets close to the 13 and then breaks away, gives us another red candle to go lower, that is your second opportunity for your clear trade. You can get in right as this candle's touching and continue lower to get another 4 ticks or 2 ticks or whatever your cookie cutter formula is going to be. But you will see that at the cross on the first candle is a good entry, and when it retraces back and touches the 13 and breaks away again for the second time, that will be a good entry for you as well. You will notice there's no cross, but however, there is separation strong divergence, a strong angle. Your Linreg is still supporting the trend, meaning it's still confirming that the trend is continuing longer by the angle of the Linreg, okay? And you can see that the candle is going lower than the previous candle. We still have momentum, and it's telling us it's a good size trend. So I will be looking for this opportunity right here. So as you can see, your good entry will be right here and right here. Okay, there's your first entry, there's your second entry on this clear trade. Now you will notice I call these waves. You have a first wave, then it comes back and tries to touch the 13. Then you have a second wave, and you may get a second attempt to come back and try to touch a 13. And then you may get a last ditch effort, which is your third wave. You can see it took quite some time. They tried here, but they didn't quite make it, and they ultimately touched the 13. And then we went for a last ditch effort, which I call the third wave, before we crossed and changed direction. On this third wave, I usually tell people stay out of the clear trade. Don't try to make an entry here thinking that it's going to continue lower, because as you see the 13 narrow in the divergence now, we had the widest part of the separation in the middle of the trend. Then towards the end of the trend you will see that the 13 will come closer to the 20, start to narrow the divergence. Then you know that we're heading for the end of this mini trend from cross to cross. When the 13 crosses the first time, breaks away, then comes back and crosses the second time, I call this a mini trend. This is a small trend with inside a big trend, right? The overall trend for this time frame is a bearish fan. It's a downward trend. But however, we have a mini trend, and then we have a small change in direction. And then the trend continues. Now, pay attention for this third wave. Sometimes you'll get a fourth one, a last-ditch effort where it touches and breaks away. Don't make your entry here because you'll find that they're very short-lived. And if you're a hesitant or nervous trader and you waited, you thought about it, you got in here, you will be in trouble because the market will turn and go against you. If your stop loss is close to the price, you will be stopped out at this point. So what I tell people, to be conservative and to go for consistent results, rather make your entry on the first wave where it first touches and breaks away, and the second wave where it comes back, touches and breaks away for the second time. Let's see if we can find other clear trades on a fan with good entries. Now you will notice that we had another cross down here, but we didn't have a candle touching at the cross. When you don't see this candle touching at the cross and there wasn't a strong angle, you can see the 20 moving average is practically flat across the page. You will notice that the trend is very short-lived. So this would not be a good entry for a clear trade. You have to have a strong angle, fast separation, and a candle touching for it to be a good entry for a clear trade. You can see how short-lived it is. If you have gotten in here right on the indicator and gone for some ticks, it would pan out maybe a 2 to 4 tick trade. However, if you are a hesitant trader and think about it first and getting on the second or third candle, you would have problems. The trend will turn on you because you don't have the longevity, so you don't have the luxury of hesitating and waiting for your entry. You have to be exact. So for that reason, I tell people, if you don't have a touching candle at or close to the cross, then rather stay out of that trade and wait unless you have big separation and a strong angle. And I'll give you more examples of that as we go. Let's continue with this trend. Here you can see we have a touching candle. We have the nice shadow indicator. We still are continuing with the fan, meaning we're still going, the price is still clear of all the moving averages below, and you could still, on this touching candle, make your entry right here or right here, and you could still go for some ticks and get out. But notice that there's not a lot of separation between the 13 and the 20. It's a very narrow trend, so therefore it's going to be short-lived, as it did. It crossed right back up. Now notice that over here we have a cross and a touching candle. This is also a clear trade, going up higher, changing direction against the overall trend in the market. Now, why is this clear trade different from the clear trade we just demonstrated? This clear trade here. The difference between this clear trade, or the one earlier, and the clear trade that we're just looking at here at 658 is that this clear trade is what I talked about in the moving averages video. It's starting with your partnership, meaning the 13 and the 20 are trying to change direction. So this is a trend change. This is a directional change. So it's a clear trade on a change of direction. A clear trade on a fan, where you have the alignment of all the moving average, tends to be longer, gives you more opportunity to make entries, whereas the clear trade on the trend change tends to be shorter lived and less price action, unless there's some fundamental thing affecting it, like news or a tendency reversal. So what you will see, and I will show you in the next video, how to use other time frames to predict how long these trend changes are going to last for, and how many ticks you can get out of them. So if you had got in right at this cross on this candle, you could still get your 2 to 4 ticks. But note, if you get in late on this trend, okay, you could run into some problems that could turn and go against you. Always remember, the rule of thumb is, if you happen to get in late on this trend and you see that you don't have the support of the moving averages below you in the new trend direction, and you're actually countering the trend, this will be a time to just get out of the market. You should just cancel your trade, exit out of the market, take even if it's a 2-tick loss or a 4-tick loss, you should get out of the trade and continue with the trend, because watch what happens. The market continues lower because now what happens is it wasn't able to sustain the trend change and came back down to give us a new clear trade opportunity at a new cross, but continuing with the overall trend in the market. So what I would tell people is, rather than trying to ride this out and wait for the market to turn around, because chances are sometimes it may continue lower. And in the next video with the other time charts, I'll show you how to make that call, whether you should stay in if the market's going to turn around and continue higher, or we should just take your loss and get out and continue with the overall trend. So what I would be looking to do is, if I didn't make my entry here and take advantage of this clear trade on the trend change, I'd rather wait and do the clear trade that's in alignment with all the moving averages. This is the one where all the stars align. This you'll get more price action, a better move, and you could safely get in even on the second candle or the third candle right here, and get your 4 ticks and get out, because you have the support of the moving averages, so you'll have more price action on that trend. But do note that we are trying to change direction here. So as you can see, what we're getting is this back and forth motion, as the partnership is now crossing over the partnership of the 13 and the 20 moving average, now crossing over the 50, and we're now approaching a fist, as I talked about in the moving averages video. Once you start approaching a fist, know that your trends are going to be shorter lived. But there's no reason you can't take advantage of this clear trade here, as while it's trying to change the direction. As you can see, it didn't sustain the direction change, and the market met up with the 50 moving average, and we continued back down. Here will be another great opportunity to enter the market. There's the cross, there's your clear trade touching, but notice that it's very short-lived, because it met up with resistance with the other moving averages. We're not clear of all the moving averages yet. We're still in a fist. So if you got in this trade and you took a 2-tick profit, if it turns on you, you can get out, or pay attention to the moving averages and see if this trend is going to continue and ride out this retracement. And we'll talk about that more as we go. I would, when I see this, where it's starting to give me a clear trade opportunity, but we're sandwiched between the moving averages, I would rather wait, tell you to stay out of the trade, and wait for the 13 and the 20 to cross down to give you the indication of the new fan. So here will be your real entry for to take advantage of the new trend. As you can see that the moving averages are separating and giving you a strong angle. The Linreg is pointing down and the price is going lower. So even if you got in on the first or second candle, you would still be successful with your 4-tick cookie cutter trade. Now notice that we broke away, then we retraced back to touch the 13. Okay, now is your second wave entry. Once we touch, now we hit a second wave. On the second wave, we came back and touched it, and then we had a third wave. This will be another entry for your clear trade right here. If you got in here, you could still successfully make your 4 ticks. It's clear of all the moving averages. We're still going with the trend. And then we had another retracement back to give you a 4th wave, another breakaway. Now I would not be looking to make an entry here, because you notice that we've already had 1, 2, and we're now 3rd wave. This is the last ditch effort, and you will notice that the 13 and the 20 are starting to narrow and is going to close the gap and change direction. And you will see this consistency throughout the market. Let's continue to look for more examples of this. Sometimes you get 2, 3, or even 4 waves, depending on how long the fan is. You can see once you get the new fan forming, you can see the longevity of the trend. You actually have 2 really good entries here. I will be entering here or here, and I will be entering here. As soon as I see that touch and breakaway, I will be entering to go lower. And you can safely make your 4 ticks and get out. So on any given fan, you'll usually find you have 2 really good entries, and you have some smaller entries as well towards the end of it, but I would rather tell you to stay away from them and wait for the new fan to start. Now as you can see, this gap close and the candle crossing, the trend change is really small because we don't have the separation between the 13 and the 20. It's pretty flat. So the trend is short-lived. It's now meeting up with resistance against the 50 moving average. So let's continue and see how this plays out. As you can see, it came right back down to give us another small fan. But notice now it's crossed over the 50 moving average. So what's happening is we actually are continuing up to change direction. So this downtrend is now very short-lived. Now we have 3 or more moving averages like I talked about in your organization. Once you see that on this retracement back up, you're going to see a longer trend going higher, and you're going to see it once it starts to cross the other moving averages. You're going to see a new change in the fan from a bearish fan to now a bullish fan. This is a great opportunity to take advantage of your clear trades. Now notice we didn't have a candle touching at the cross, but what we do have is we have the angle, we have the separation, we have 3 or more moving averages giving us the new trend change, and we are going up to the 200 as I talked about before. So if I got in here somewhere, but I would rather you wait for a touching candle. So if you don't make your entry on the gap close, take advantage of the gap close, wait for the candle to touch the 13 and then make your entry, and you'll see that you'll get a nice price action. Going up through the 200 is you'll get 4 ticks. Then you wait for it to retrace on the first wave. As you can see, once it comes down and touches the 13 or close to it, that's the end of that first wave. That's what you're looking for. As soon as it touches, you know that you're expecting a breakout. You're looking for this right here. Once you see that, expect a breakout. As you can see, we still got the strong divergence, the strong angle. It's now crossing the 100 moving average, so this trend is going to go higher. I could wait to get through the 200. Remember I said I never make an entry on the 200, and I could wait to make an entry here or here if I wish, because I can see with the angle we're going to penetrate. But if you decide to stay out of this because of, wait, there will be another opportunity. Here, as you can see, once it's, let's say you didn't make an entry here, you waited for it to come back to touch the 13. Here's a good entry for you for your clear trade. You've got separation, you've got the moving averages fanned out, you've got 3 or more moving averages supporting the trend, you've got a nice angle, and the price is going higher. And as you can see, this will give you a nice 4-tick move. So wait for it to touch and then get in as the candle changes color from red to green, and get in on that green candle. Now we're approaching a trend change, but notice that the trend change didn't come all the way down. We closed the gap, but then it gave us another opportunity to take advantage of the clear trade right here. It came back, we had the candle, and we started to get separation again, angle forming, and we have the support of all the moving averages. We have a lot of separation between the 20, the 50, the 100, and slowly now the 200. So as you can see, we have another nice clear trade opportunity to get in on, try to get in as on the candle that's touching or close to it as possible. The very next candle if you can. Now we have a gap close and a trend change. Now we have what's called a flat market. We're approaching a fist. As you can see now, it's collecting back with the 50 moving average, and we just got this whipsaw, right? Back and forth, back and forth. You want to stay out of the market during this time frame because we're changing direction and we don't really have the separation we need between the 13 and 20 to really give us a long trend. You can get caught going the wrong way on these and then get stopped out. So don't trade it when the moving average is sandwiched like that. As you can see, if you just wait a little while, at some point you're going to get another breakout. As soon as the 13 and the 20 cross, take on a strong angle, and it crosses over the other moving averages and starts to form a new fan in the new direction, you're going to see a breakout with the candles. They're going to go lower. So here is your good entry right here on this candle breaking away. If you waited for the second candle and just rode it through this trend, you can see we got 3 or more moving averages, and it's now starting to cross the 100 moving average. So you can see that you would safely get in and still make your 4 ticks and get out. If you want to be exact, I would try to get in here. If you missed it, wait for the candles to come back, close the gap, and touch the 13 and get in right here to make your second entry on the fan. Then you will get your nice 4-tick move all the way to the 200. And you could, here gives you another opportunity to make your entry right here or here on as it's touching the 13 and going lower back to the 200. As you can see on this one, we had 1, 2, 3 and a last ditch effort. I would not be trading this when it's so close to the 200 because you could get a lot of ping pong, as you see, and the price could bounce right back and therefore give us a trend change. So if you take advantage of it going to the 200, once you hit the 200 you want to be out and wait to see if the market's going to bounce and go up, or if it's going to penetrate and go through, in which case you can take advantage of the trend. Here you can see we had a direction change. And if you are looking for a good clear trade, notice that the 20 and the 13 are flat. There's not a lot of divergence. So I would not be looking for and expecting a lot of price action here. And I would not be looking to make a clear trade here because look, we're approaching a fist and it's pretty fat. What I'm waiting for is real strong angles, and I'm looking for that fan, which you can see it right here at just before 11:52. As we had the cross, we had a strong angle with the 13 and the 20. We had the 50 moving average and the 200, giving us the support of 3 or more moving averages, giving us a nice fan. So even if you made your entry here, here, or here, you would still get your 4 ticks to get out. But you want to get in as close to the cross as possible, so I would recommend the first or second candle. As you can see, the first wave was very long and the second wave was very short. You could still make your entry here, right at the candle where it's touching the 13, and then take advantage of this trend. But the reason why I tell people to stay out of the third wave and fourth wave and do no more than 2 entries on any given fan is because sometimes it just gives you 2 waves and then it changes direction. Because as you can see, while we have a fan, we don't have the alignment of the 100 yet, and we actually are approaching a fist. So that the trend is a lot shorter. Even though we have nice separation, we have nice price action. So even if you just made your entry here on the first entry, you would take advantage of it. And as you see, it's narrowing here. Maybe you don't make this entry. Wait, there will be another opportunity. Now on this trend change, we happen to have a touching candle here, just after the cross. And notice that we're going to the moving averages, which are going to give us resistance. So you want to be careful. The reason we have this nice price action here is because of the angle in the separation between the 13 and the 20. But know that this is a clear trade on a trend change versus a fan, so it's going to be short-lived, as we can see. So if you don't time it exactly and make your entry here and get your ticks and get out, you know, if it doesn't give you 4 ticks, go for 2 and get out, then the trend is going to turn against you. So be prepared, and be prepared to get out of that trade and wait for the next fan. As you can see, we are approaching a fist. So now it's time to stay out of the market. Now what you can see is we have crossed, we have the fist, and now we get in a new breakout with the fan continuing. Here will be the cross, the touching candle. We don't have a huge separation here. The moving averages are very close together, even though the 200 is the bottom and the price is clear of them. So we have a slow start. It is a good clear trade, but it's a slow starting clear trade. So what you want to do is look for the candles that are breaking away. So as you can see, I will be looking to enter here where we have a touching candle, where it really looks like we're going to start breaking away and start getting some separation. And then you could take advantage of this and still get your 4 ticks. As you can see, it crossed right back down because we didn't really have huge divergence between the moving averages. The trend really took shape over here as we started to get more angle and separation on the moving averages. You could take advantage of this fan here and take advantage of your clear trade. Here will be another great entry as the first wave completes, it comes back, touches. We'll look for the next candle, jump in and take advantage of the second entry on your fan. As you can see, we have a fan, and it usually always gives you 2 good entries in your fan. Anywhere along here, it really took shape here because, like I said, we didn't quite have the divergence needed to really give the overall trend. So, but here would still be a good entry to get your 4 ticks of your cookie cutter strategy, and here will be a good entry to get your 4 ticks on your cookie cutter strategy, and then get out. As you can see, the trend change didn't give us a good clear trade because there was too much divergence at this point, and this was too flat. The 20 and the 13 were too flat, and therefore would not be a good clear trade opportunity here. You have to wait for more angle and more separation. Now we're approaching another fist, and we're waiting for a new breakout. Here you can see the moving averages start to break out. We have 3 or more moving averages in alignment, and we're getting separation. The price is breaking away lower. We had the cross. We didn't quite have a candle at the cross, but it was pretty close to it. We still had the price action going lower to the 200. Remember what I said, whenever the market's at least 1.5 to 2 inches away, and you see that there's an angle and separation, and you see this fan taking shape, then take advantage of it, jump in, because you'll get a good clear trade. Even if you got in here, you would still get, you know where the market's going. It's going to the 200. It's kind of like a horse heading for home. Once it approaches the 200 and sits on top of it, then you're going to see that there's going to be resistance. But when it's clear of the 200 and it's going to the 200 with a strong angle and separation in your moving averages, then you're going to see a good clear trade opportunity. So I would still take advantage of it. I could enter here, 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 and still make my 4 ticks and get out. As you can see, we had the first wave gap close. The second wave didn't pan out to anything because you're sitting on the 200. So I would not be entering right here on the 200. Never make your entries on the 200, as I have stated, because as you can see, the price just went back and forth, didn't really go anywhere, and then it turned around and changed direction. Now we have another sideways market at this. The moving averages are crossing each other, and we're looking to make a new fan in a new direction. You got nice divergence. We got the partnership happening, crossing over the 50 to give us 3 or more moving averages. We didn't get a candle touching at the cross, so see how short-lived it is. It didn't give us. It went straight up to the 200. I wouldn't usually be making this entry when it's this close, and I don't really get my touching candle. So this would not be a good entry for your clear trade. I would rather ride this out and wait till I get a touching candle that's through the 200. So we didn't really get a good opportunity on this trend change because we're crossing over each other. Even though we had separation, we had nice price movement. But like I said, I never trade on the 200. And as you can see, this is approaching the end of the day, so we don't have the traders to then confirm the trend. So as you can see, as I've scrolled through, you still have plenty of opportunity to make good entries and good size fans to really take advantage of your cookie cutter strategy. So now let's talk about how I'm going to take this back to the beginning of the morning. How we can use the other time frames when predicting these trends. So bear with me 1 minute, I'm going to pull up the other charts. Okay, so here I have the 1 minute and the 3 minute chart, and I'm using my 3 minute to help as a leading indicator for my 1 minute clear trade entries. And I know you're saying to yourself that the 3 minute is lagging. 3 minutes on the 3 minute chart, every candle is 3 1 minute candles on the 1 minute chart. So how can we use a lagging indicator, because the 3 minute chart comes after the fact, right? For a leading indicator. Well, what we're doing is we're looking for the strategies. We're looking for our gap close versus our clear trade. Remember we talked about the 13 EMA gap close, and there are additional videos on this provided to you by shadow traders. What is a 13 EMA gap close? Well, it's when the price breaks away and comes back to touch the 13, right? So what happens is when we've had, as we talked about on the 3 minute chart, we had our clear trade, right? Here's the candle crossing, candle is breaking away, and as you can see, this is our clear trade. At some point it has to close the gap. As you can see, it goes lower and lower and closes the gap to touch the 13. Now, if you notice on your time frame, remember your 1 minute chart is a magnified view of this. So when you see this 3 minute gap close taking place from 3 o'clock in the morning down to 3:36, now it did have some chop in it because we had it touched and then we had another spike candle, then it went back down, then we had a spike candle. Now it took a while before it finally crossed the 13 and to give us a new change of direction on this overall trend. If you look at the 1 minute during that time frame from 3 o'clock, okay, where it started to close the gap, the market that's going to close the gap first is your 1 minute chart. Then you'll see that it will continue in the new direction based on the 3-minute gap close. If the 3-minute has to go to the 13, you will notice from the point that the 1 minute touches the 13, it's going to continue lower, as you can see in this trend here, to ultimately touch the 13 for the 3-minute chart. Now what I tell people is when you get a 3-minute, when you get a gap close, I should say, at the end of your clear trade, chances are, when it's at the end of the second wave, chances are that you're going to get penetration because it's going to cross and change direction. When you experience penetration on your 3-minute chart, okay, you're going to get your clear trade opportunity in your new fan on your 1-minute chart. So what you want to look for is that cross and that penetration. Now you can see we had this sideways market, this chop going because of the chop that was happening on this gap close. So we're going to fast forward to the point where we really started to get the cross and penetration, which is here right at 342. Now you'll notice at 342 on my chart, I'm already on the second candle of my new clear trade, and you can see I have more than 3 moving averages. I'm getting a strong angle, the price is breaking away, I'm getting separation, so you can safely say I'm starting a new fan. So how can you predict this entry? Well, if you look for your gap close, the one that's really finally closing, where you get your strong angle on your 13, on your 3-minute chart, right here, and you enter, I usually, if there's not a lot of space like there is in this one, I usually enter on the second candle where it's really closing the gap. You got the confirmation of the Lin rate changing direction, giving us the new direction. We've got the angle of 13 that's narrowing, it looks like it's going to cross. So if I entered here on this candle, or even here on this candle, I would be, I'd have a nice early entry for my clear trade. As you can see, I will probably be entering somewhere around here, and I could take advantage of my 4-tick trade. Now let's say you've made your entry and you've got your 4 ticks going to the 200. Let's continue to follow the trend. As you can see, the trend was a nice little fan forming. Now it's closing the gap. Now you're asking yourself, is this market going to go lower, or is this going to change direction? Well, you notice that we haven't had a touching candle yet, and we haven't really had a clear first wave, second wave. Now I usually say to myself, we've got strong separation here, we had an angle here, we closed the gap, but is this going to continue and change direction? Well, let's check our 3-minute chart to see what it tells us. And you'll notice at the time frame, 358, okay, if I go to the time frame on my 3-minute chart, we have a small gap close, but we have a strong divergence on the 13 and the 20, strong separation, strong angle, and what are the chances of this market's going low? We've just had a first wave gap close. So I say to myself, the 3-minute is not ready to change direction yet. So chances are this market is going lower, as you can see. So what's going to happen on our 1-minute chart? It's going to touch and go lower. As you can see now, we have our new clear trade opportunity, our second clear trade entry. We had our first one up here, we could have taken advantage of this, and we have our second clear trade entry here on the touching candle coming lower to grab our 4 ticks. Now it looks like we're going to have 2 waves to close the gap, so let's follow and see what our 3-minute is telling us. Looks like we're going to close the gap, and we do. How does this gap close on the second wave? You can see we had the first wave, it tried to close the gap but it didn't make it, so we had we had a small retracement here, and then it continued lower for the second wave. You can see that there was a strong angle, a lot of separation. So watch out for this first wave gap close on the fan on your 1 minute chart, that you don't think it's a trend change and that you're going to get across. Pay attention, is it the first wave, or is it the second wave, or the third wave? Sometimes you get 3 or 4. So now we want to find out if the 3 minute is ultimately going to change direction. We still have a lot of separation. We could go down for another wave. As you can see, we do go down for another wave. We still have another separation. How does that play out on your 1 minute chart? On this gap close, we pretty much came very close, and we had a small change of direction. So what you'll find, when there's a lot of separation and we have a lot of candles to go to close the gap, you're going to experience this change of direction on the 1 minute chart, but it's going to be short-lived, because you're going against the trend, the overall trend, which is your bearish fan. We have a strong angle, a lot of separation on your 3 minute chart. So the chances of this trend continuing even lower is very strong. So watch what's going to happen. Right here at 4:30, you're going to get your new fan, your new clear trade opportunity. Here's another good entry to make your clear trade. Grab your 4 ticks and get out. If you took advantage of this gap close and got your clear trade here, you could still take advantage of the clear trade on the trend change, get 4 ticks and get out. But no, because you're still in a gap close on the 3 minute chart, and chances are this trend is going to continue lower, that it's going to be short-lived. So don't expect this trend to continue higher and higher. If you are a hesitant trader and you're getting late, know that this trend is going to turn on you, so you should be looking to get out, no matter, even if you're at a 2 tick or 4 tick loss. Take your loss and get out and go with the trend. Now let's see when the 3 minute finally decides to close the gap between the candles in the 13 and change direction, cross back up. And here we see it. So we had a first wave, and it didn't make it back to the 13, but we did get a green candle and this candle going higher. Then we had a second wave. It did close all the way. Then we had a third wave, a last-ditch effort. And as you can see, that's what you're going to see on your 1 minute chart. Because we had this great gap close here on the 13, the Lind rate turned, we had a lot of candles going higher and higher, and really touched and penetrated the 13. We experienced this trend change on the 1 minute. Now what I'm really looking for is this opportunity right here in the 3 minute chart. This trend change. Now notice that it's flat, and it's not doesn't give us a lot of price action here because it's going against the overall trend. But notice, if you see at the candle touching at the cross, okay, at 457, if you go to 457 on your one minute chart, you're going to see that a clear trade happened just before. A clear trade entry happened 3 minutes before. So you can see here's your touching candle, because remember this, for every candle on the 1 minute has to be 3 minutes earlier on, every candle that happens on the 3 minute chart has to be 3 minutes earlier on the 1 minute. So with 457 here, then you're looking for 454 on your 1 minute chart. As you can see here was the touching candle and the new breakaway. So you could use this as your next clear trade entry if you didn't get in at the cross. Now notice that it was very short-lived because we didn't have a true fan. We're on a change of direction. We're very narrow, not a lot of separation. You can see the 3 minute is telling us that it's very flat. So if you happen to get in exactly and get some ticks, even if it's 2 ticks, then make sure that you get out and do not stay with the trend. Wait for the real separation to occur to give you the ultimate trend direction. And in the next video, I will show you how you can use other time frame charts to really give you the bigger picture. But right now, we're just going to narrow it down to the 1 minute and the 3 minute, which you can have on your monitor. And then on the other monitor, you can have a 5 minute and 10 minute or a 10 minute and 20 minute. And I will show you in the next video how to use those as an expanded view on the overall trend. Now, as you can see, the market continued to go sideways because this overall fan was still very strong, and the market did not actually go up and broke to come back down to follow the existing trend. And I'm going to show you using the other time frames why this trend change was flat as it is, and why the market continued lower here to give us a new fan continuing in the same overall bearish fan. Why did this trend change not pan out to go higher? So it gave us a very flat clear trade. And I'm going to show you that in the next video. So as you can see, what you're looking for is the next breakout. Here you can see the fan forming, and you can see your 3 minute chart is giving you the same story. So you could jump in, there's your clear trade opportunity continuing. Now notice that you're faced with, when you get a gap close, is this going to be the trend change for the new direction? Well, here we had the first wave, there we had the second wave. Let's see what our 3 minute is telling us. The 3 minute is closing the gap, so what you're going to see on this 3 minute gap close, as you can see here, you're going to get a very small trend change. As you can see, it closed the gap, but now you can see it's continuing lower. Last ditch effort, but it's very short-lived. We had a last ditch effort on the 3 minute chart before it continues lower. As you can see, here at 6:01, oh, I'm sorry, I scrolled too far forward. Bear with me 1 second. As you can see, we're experiencing this gap close after the first wave. So therefore, you're going to see a small trend change. Now notice that the trend change didn't really pan out to be a really strong clear trade, because we're still in the first wave gap close of the 3 minute chart. You can see the angle is still very strong, a lot of separation, and therefore the trend is going to continue. So know that this trend change is going to be very short-lived, and pay attention, it's going to go lower. As you can see, it does, and continues with the overall trend. The trend is still too strong, and you can see that finally at 7 o'clock we finally had our trend change, and you will see this play out on your 3 minute chart. We had a trend change here with the first wave, second wave. Here was your good clear trade entry at 6:42, and as you can see, it showed us on the 1 minute, there was your clear trade coming back down. And then finally we had a gap close here around 7 o'clock, which was a nice gap close on the 3 minute chart. You could make your entry on the second candle, which will give you your nice clear trade start on your 1 minute chart. But notice that it's still going against the overall trend, which is your bearish fan, and it could be short-lived. There we got another fan coming down, so we have another clear trade opportunity, and you can see that your 3 minute is telling you that it's continuing lower. Now we have another gap close and trend change, which is continuing higher on our 1 minute chart. But see how close the moving averages are pretty much festive. So we have a very flat, not a lot of price action yet. Now we have another breakout at 8 o'clock, continuing lower. Let's go to this. Here's our cross right here, candle touching. There's our clear trade entry. We've got an angle forming. But notice you see that it was short-lived. It hit up against the 200 moving average. Okay. I mean the 100 moving average. And that was because we were still in a gap close of a 3 minute chart. Can you see that? This was our gap close here. It's still retraced up. We hadn't had the cross yet. If you look for the cross right after 812, if you go to where 812 is on your 1 minute chart, notice that's where the real clear trade took shape. This movement here was still the gap close on the 3 minute chart. So the real clear trade took shape here, where we had the cross on the 3 minute chart. Then we had our first wave gap close. As you can see, we had our first wave gap close, and then we had our second entry for our clear trade on the 3 minute chart. You can see how the same strategy applies on another time frame, just with a different view. And you can see at this time frame, just before 8:30, we had our second clear trade entry on the 1 minute chart. Here was our gap close, which was our first wave entry, which didn't change direction because we're still in the first wave. See the angle, the separation on the moving averages? So really pay attention to these waves. It'll tell you when the probabilities are of trend changes. As you can see, there's our second wave closing the gap, so we're going to get crossing and penetration of the 1 minute chart. Now we get a final trend change, and you're going to see in that time frame right here is your good clear trade entry. Okay, you're going to see a nice new fan starting to take shape on the 1 minute chart. There you can see we've got our 3 moving averages forming an organization going up to the 200. And the reason, even though I didn't get a candle touching here, I did get a candle touching on my 3 minute chart. So that's the reason I would make this entry, because we've got an angle, separation, and we're going up to the 200. Because on my 3 minute chart I had a candle touching telling me it was going to be a clear trade. The reason it wasn't touching here is because we're coming through a direction change on our gap close of our 3 minute chart. We have penetration and then it retraced right back up to give us a good clear trade. There was our first wave gap close, second wave gap close to here. There's our second wave entry for our clear trade, and you will notice there's our first wave gap close on the 3 minute chart. And you will notice if you look at your second wave entry right before 926, you will notice that you still have a very nice clear trade happening on your 3 minute chart. Nice separation, strong angle, prices breaking away higher. So you can safely assume that this clear trade is going to pan out on your second wave. Now because we have such strong price action divergence, you can see that this trend is going to continue and going to have longevity. As you can see, look how this trend continued based on the strength of the trend and the price action, the divergence on the 3 minute chart. Now what I'm looking for is the gap close on the 3 minute chart to tell me my trend change. You can see it's a very slow gap close because it was a lot of separation, a strong new direction. Now you can see we have on the 3 minute chart finally a change of direction at 10:45. and you will see that we're getting a strong trend change and new clear trade starting. Whoops. So you'll notice that we're actually still in a fist on the 1 minute chart. So what we're doing is we're waiting for the real separation to occur. We're still in a change direction, which only kicks in at 11:03. We want to see the angle. There we go. There's the angle on the 1 minute chart. Up until that time, we're still pretty much fisted. It made an attempt here at 10:45, but as you can see, the 13 moving average and the 20 moving average were still flat and not giving us the angle we're looking for as we did over here. Here at 11:03 we had the angle change. Do you see the difference between that and the flat trend here? Now even if you got in here and you had this retracement, you could still ride it out and you could see that you're going to ultimately change direction, do your trend change. And there's your nice clear trade opportunity. You got the cross, the candle touching, and breaking away going lower. As you can see, we had our first wave, second wave was short-lived, and a direction change. On our 1 minute chart, you're going to see that continues lower. So we actually had one wave, it touched right here. You could get another entry here for the second wave coming down to the 200, and then we got caught up on the 200. So we had a lot of chop, which is the reason why the second wave was so short-lived, was really because of this 200. I would not be trading right here. I would have made my entry here and here. Now I'm expecting a direction change. As you can see, the 3 minutes confirming the gap close here, and you're going to see a clear trade opportunity (10:48, 11:48). Sorry. Here we go. Clear trade opportunity to take place on your 1 minute chart, because you have the cross happening. If you wait for the train to really end and cross, and you get in on, I would wait for the 3 minutes to really have the lunar confirming, the second candle going through, showing that you're going to cross and get penetration. Then you're going to see a really good clear trade entry on your 1 minute chart, and you're going to be able to see a fan taking shape, as you can see here, and you're going to be able to make your clear trade. So as you can see, if you follow through with your 3 minute chart, you can better predict your trend changes. As you can see here at 12 o'clock, we had a gap close on the 3 minute chart, which gave us a trend change on the 1 minute chart for a clear trade entry right here. Continued higher, because notice the overall trend is a bullish fan, right? So what you're going to see is this trend change is going to be short-lived. So you can see that we went higher back into a bullish fan. Here's another cross. There's your clear trade opportunity going long. Gap close, which didn't last long because it was just a first wave gap close on the 3 minute chart. So what you have to do is really pay attention to the overall fan and which direction, what is supporting your clear trade direction. So as you can see, the 3 minute continued, first wave, second wave continued into a third wave even higher. So therefore the second wave penetrated but then retraced right back because we had the support of the fan to take this trend higher. Now we have a new cross with a new clear trade opportunity. There's your 4 ticks, comes back, touches, Here's your 4 ticks as we showed you earlier, and your 3-minute confirmed that for you. Now when the 3-minute finally closes the gap, after today we had our first wave, second wave closes the gap, changes direction, you're going to see a change of direction on your 1-minute chart, going lower. So now join me in the next video, and I'm going to explain how you can use the 10-minute and the 20-minute charts to better predict these the overall trend changes for your 3-minute, and thus affecting your 1-minute entries.